Hey guys, and welcome to my channel Fiscal Voyage. And today, thank you to Henry Rossi, who commented and left a message saying that he wants a stock analysis on Southwest Airlines. Thanks, Henry. So today we're gonna do a stock analysis on Southwest Airlines. We're gonna determine in a 5-minute analysis if it's buy, hold, or sell. Coming right now.
All right, so let's start with this 5-minute stock analysis of Southwest Airlines Company. It could be found on the New York Stock Exchange as LUV. Southwest Airline Company is a major American airline headquartered in Dallas, Texas, and is the world's largest low-cost carrier. The airline was originally established in March 15, 1967 by Herb Kelleher as Air Southwest Company and adopted its current name, Southwest Airlines, in 1971. At that year, it began operating as an interstate airline wholly within the state of Texas, first flying between Dallas, Houston, and San Antonio. The airline has more than 59,000 employees as of March 2019 and operates about 4,000 departures a day during peak travel season. As September 9, 2019, Southwest carries the most domestic passengers of any United States airline. The airline has scheduled services to 101 destinations in the United States and 10 different countries. And it made some expansion recently in March, April, and May to Hawaii. All right, so let's look at the fundamentals. Revenue grew at a compound rate of 8.72% from 2009 to 2018. Which is very good revenue growth. Net income, however, grew at an astounding rate at 42.93% at the same time frame. Currently has a investment grade BBB plus credit rating and operating income at 4.98%. In this time period, earnings grew at 47.48%. Going forward, earnings are not expected to go that high, but they're still at double-digit level. Revenue 5-year average for the past 5 years growth at 4.41%. Operating income 5-year average at 18.64, and net income grew at a rate of 26.73. So net income grew almost half the rate from 2009 to 2018, from 42% to 26% for the past 5 years. And earnings growth 5-year average is 32.51%, which is again lower than the 10-year average of 47. Let's continue to look at more fundamentals. 2018, the company earned $4.24 a share. Net margin actually compressed at 11.12% versus 2017, which was 16.48%. Debt to cap is really low, 24%. They currently have a very low dividend yield of 1.23%. I like to see companies at 3.5%, 4.5% or higher dividend yield for some good income. However, they do have a great payout ratio of 36%, so they can grow the dividend at double-digit rates, which they have actually with a 5-year dividend growth rate average of 36.1%. They've been growing dividends consecutively for 8 years. With that high 5-year growth, they have a charter rule of 37, which is outstanding. You like to see companies at 12 or higher, but this one came in at 37. Just blew that out of the water. They have a 5-year dividend average of 0.8%. So at the current yield, you do get a better yield than the 5-year average. And the most recent dividend increase was 12.5% in May 15th of this year. Let's look at the future. For this year, analysts expects $4.21 adjusted earning, which is slightly lower than last year at $4.24. That could be the reason why the price of the company has kind of been flat for the past year or two. 2020, however, expected better growth at $5.15. CFRA has a 3-year projected earnings growth of 15%. So we're not getting that 40 plus earnings growth. However, we're getting double-digit growth in the mid-teens. Currently, the company sports a 13 PE versus this year earnings, and forward P of 10 with a 5-year average at 16. So it is undervalued based on PE. Now let's look at the fundamentals fast graphs. As you can see, the black line is the monthly closing price, and the orange line is the earnings, and blue is the normal PE. Based on this, it looks like the company is undervalued both on normal PE and the earnings line. Let's see how undervalued the company is. CFRA has a fair value at 64.20, Morningstar at 56, Simply Wally 89, Fast Graphs, Yahoo, and my dividend discount model analysis at 92.04. Averaging out the 6, we get a fair price of $71.87. At current price of $54.49, the company is undervalued by 31.9%. And with that, I recommend it as buy. The company has great momentum as far as growth. Right now, the stock been flat, but that's okay. That's just a good opportunity to buy shares. I personally am not buying because of the low yield. Like I said, I like to see companies at 3.5% to 4% or even higher yield. I like the income. However, if you don't mind the low yield, this actually has high growth potential going forward. Like I said, of 15%, and earnings are projected to be higher for 2020 and going forward. But overall, I think the company is a buy, is a good company to have in your portfolio for growth. So with that, thank you for watching my stock analysis on Southwest Airlines. If you have a company that you would like to see next, please leave a comment below. And thank you for watching. If you find this video informative, please hit the like button and subscribe to my channel. Also, you can check out my portfolio link in the description where I have all my stocks that I currently hold. And don't forget to look at my website, fiscalvoyage.com. Thanks guys, have a great day.